Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, October 15th, 2021. So we're halfway through the month. Let me do a quick update on the markets, spend a few minutes there, then I'll roll into brief updates on gold, silver, platinum, and palladium, the precious metals, followed by treasuries, crude oil, natural gas, and lumber. Those are really the main asset classes I've been focusing on recently, so we'll hit an update on each one and then wrap it up here. All right, 60-minute chart. This is what I've been looking at quite a bit lately on QQQ. Had this downtrend line. Have it a little bit different on the futures. I'll get to that, but we had at least three reactions there. Not the most well-defined trend line, but there's three of them. The way that's drawn, that was taken out. And again, so you give, like I said, it's a series of check marks. It's not all black and white, and things don't go from completely bearish to completely bullish or vice versa. But the fact they took it out, then they took out that 330.66 level, and today they entered the gap and they almost backfilled it. I'm talking about this gap back here. However, you still have significant resistance there, about 69.50. So overall, the action since this bullish divergence was put in here has been bullish, of course, because we're moving up. Could be just a corrective wave, a ABC up, and still within the regular, typical Fibonacci retracements and everything else of a corrective move. But only time will tell. If we keep going up, we start burning through fibs, burning through resistance, that will change and again continue to chip away at the case to be made for a move down to my next target at 343. So that's what it looks like on the 60-minute chart. We'll look at SPY real quick. SPY took out the downtrend line there as well, backfilled the gap, stopped on it, gapped up today, went up to my next resistance and closed right on it. And I had that level at 445.90. We closed, or this is after hours, 445.88. Close enough for government work. But point being, there's QQQ and SPY both closing at resistance. And then most important here is the weekly charts. So we're going to start here. I guess I'll start with QQQ. And now nothing has changed on the weekly chart. So again, some things, have changed in the last couple of days, including today, a little more bullish when you get a little, pop above a resistance level or backfill a gap. However, on the weekly chart, and today is Friday, and the markets are closed. So these are the candles that finalize. So what has happened on QQQ? Well, I have this trend line here, and it's pretty well defined. We have, again, on weekly candles, lots of reactions here. We hit it the other last week and again this week and held that level. So let me just color it up and you can see it clearly. We'll make it purple, that trend line there. So nothing's changed there. We'll still need to break that, and when we do, we'll still come down. I think we'll hit the 200-day, 342-ish, somewhere in there. 343 is the actual target, but I think we'll go a little lower, down to around 342, if we get one more jog down. What else has not changed? So that hasn't changed. We still need to break that level. It's on support. And what certainly hasn't changed is this PPO histogram, meaning we had the bearish PPO cross. When that happened, it did two things. Number one, it confirmed the negative divergence that's been building, because until then, the PPO was pointing up, and there was a potential to burn through or take out or negate the divergence. And in my book, again, it's just me, I consider divergence confirmed once you put in a bearish crossover to effectively put in a lower peak on the indicator. So there's our lower peaks right there. Confirm that divergence when we had the bearish crossover, and as I mentioned, this is a pretty darn good trend indicator. Tells you when the corrections come. The biggest corrections in bear markets for decades come always after you had these big green hills, these uptrends, and then you get that crossover, and it does a pretty darn good job, not perfect, but a pretty darn good job of defining the trend. And so that has not changed. We are still got another weekly bar. In fact, this one was about maybe a hair lower than the previous one. The other thing I'd point out is that it is quite unusual, not impossible, but very unusual to see a correction. Remember, some of these, well, in recent weeks or months, we've had just little pullbacks I'll talk about that. I'll get to the NQ chart in a second. But this was the biggest drop that we've had in months. It was about a 10% drop. We reversed right off, hit the second target and then a little bit more, and had a bounce so far. So again, one of the biggest corrections in a while, and it is unusual. Not unseen, but unusual. Once you put a top in after a trend and you have a correction, it is quite unusual not to visit the 200-day exponential moving average. Again, sorry if it's confusing. This is a weekly chart, so the 200-day exponential moving average on the daily chart is the same as this one here, the 40-week exponential moving average on the weekly chart. It's the same moving average. And this we were really far from it there, and that was a big drop, mind you, by the way. It was about 14% plus, and there was another big drop, double digit, about 11%, and we were well above the 200. This was coming off, again, the nuclear option when the Fed came in after COVID hit, and so we got so far away these corrections didn't bring us there. But once we've seen momentum waning, and number one, we haven't hit the 200 in a long time, or this 40-week. But normally, here's what I'm getting at. Normally, you can see from these corrections, you hit it again, you hit it again on that correct. These are different corrections. Correction, there's a top, there's a top, there's a top, there's a top. On that one, we hit it. And remember, it acts as support. It does a great job, better than any moving average I've seen on the weekly time frame, particularly on the tech-heavy QQQ and even the S&P 500. So you can see these corrections usually bring it back, the index back to that level, and that's where the buyers step in and then the uptrend resumes. And of course, support once broken, as it was right here, once broken becomes resistance, and you back tested 1, 2, 3 weeks, had a leg down, tried again, another back test, and a failure. And so here was a successful hit. You might see the candles look like they go through there, but that green one means it closed back above there after an intra-week dip. So again, just a phenomenal job, a phenomenal track record. And again, being as close as we are this time, it is certainly possible, but I think unusual not to come in and check that. So I think it'll still be checked within the next few weeks. Same thing on SPY. You can see SPY here on the weekly chart. Now that the week is over, nothing has changed. You had a breakdown. Here was your uptrend line on SPY. A little kickback rally, still well shy of the 415.51 support level, plus the 200-day and 40-week moving average right there. And again, same thing with SPY. Corrections bring you back to that level. Breaks of the level and then back test, that's bearish. Recovery is bullish. Back test, back test, back test. There's another failure below it and a back test, followed by a big drop. Recovery and a back test. There's a recovery. There's the last check that we've had of it. So just like QQQ, we haven't checked that level in a while. So I think it's a magnet when you get close to it. Speaking of that, it reminds me of Facebook. I talked about Facebook, looking at the, really on Facebook, it's that 200 simple moving average. I had the red line as the exponential, but the simple moving average, and I've talked about that quite a bit. So nothing's changed there. You can see Facebook, that's where the buyers have stepped in. It's support, support is support until unless broken like it was there. When it's recovered, that's bullish, and then you back test, back test. So the Facebook trade, I threw it out yesterday, is either a hedge to a short. It's not really panning out, and I'll tell you, I'm not happy about the fact, or it didn't give me any more confidence in the trade after I posted it in the morning in pre-market. We did break out during the day, but we didn't have any follow through. Volume was lackluster. I like to see above average volume on breakouts, and I like to see follow through buying, neither of which we've seen. Now, with that being said, two things. Number one, the breakout is still intact. Just because we didn't take off, sometimes you break out, sometimes you come in and back test a trend line, then you go. So number one, we're still above this downtrend line until less we fall back below it. If we fall below it, the breakout has failed. And the other thing is, keep in mind that you have that 200-day moving average just below, both the exponential and the simple moving averages just below support. So if you took this one, your stops ideally would be on a daily close below that level. And so, this one could still go. And as I said before, if QQQ goes on to hit my next target down around 342, 343, it's probably almost certainly going to drag Facebook down with it. Maybe Facebook holds and hovers around or has, one of these brief splits through there. That time it went through the 200 simple, but it grabbed support. You can see that red line right there. Perfect support on the 200-day exponential. So that's where that subset of buyers stepped in. There's a couple other tags on it. All right, so enough on that. Let's move on, and we'll see. Again, nothing on the weekly chart has changed this week. Daily chart, today was another up day, and that certainly doesn't help the bearish case, but it doesn't eliminate it. It chips away at it, but it has not yet taken it out because we still haven't bounced beyond levels that are typical counter trend rally levels in a larger downtrend. This is the NQ 60-minute chart. There's the primary downtrend line. See on NQ, it's more well-defined, a lot more reactions than QQQ, and we effectively closed on that. There was a little lift in the after-hours session so far in Globex session, but we're right at that pretty significant 15,130 resistance. So here's how we end the week. So far, a counter trend rally. These were positive bullish divergences right here. They've certainly played out for a rally so far. Right here, that divergent low is at an ABC corrective wave in a larger downtrend. I still think there's a decent chance, but it's going to be less decent next week if we pop above there and hold above there, and even less decent yet if we take out the next resistance at 15,270 and then 15,360. That's really going to stretch what would appear as a normal counter trend rally. Gold, no update or no change whatsoever from where I posted this morning. Here's our near-term uptrend line on the 120-minute chart. Same chart I posted this morning, although it's updated here. And that's it. So I still think the buyers will step in, get the next leg up to that 1809-ish target and ultimately 1837. Obviously, a break below there isn't going to be bullish, but there is still some support there. It doesn't necessarily mean lights out for the gold trade. You have nice support just below, and then that reaction low, but this is still what I favor. And silver, silver did this morning when I got that post out to you in pre-market. We were right here. We had hit the trend line and yesterday bounced back, or as expected. That's the first tag of the trend line since back here. You have a lot of nice distinct tags on this trend line going all the way back to this high right here, and hit it, pulled back. So I think that was and will prove to be an objective long entry, and if that gets taken out, there's still plenty of support below, but I do favor next week a break of this trend line and a rally up to the next target there, about 24,867 and ultimately 25,849. Those are my near-term targets for silver via silver futures. And an update on platinum and palladium I threw out there, what was it, last week or the week before? A couple weeks ago. But yeah, going back here to these breakouts, these divergent low bullish falling wedges, we were short platinum or palladium for, oh gosh, where was it? Somewhere back here. Caught most of that move down, and then I mentioned time to, go long and maybe cover those shorts, reverse for a long, break out of this bullish falling wedge, back test, and then we took out the primary trend line. I'm going to say this, I'm cooling down, even though we're still shy of that next potential target there at a 1084 or so. I think platinum and palladium could correct here because I'm seeing these divergent highs here. Actually, they go a little bit longer than that. So you've got negative divergence. And remember, I remain longer-term bearish on palladium. Yes, I'm long-term bullish on gold and silver, but palladium for both fundamentals and technical reasons, I am longer-term bearish. Been near-term bullish recently, but like I said, with these divergences, at best you ought to consider raising stops, maybe not too much too far below that 1028 level. That was that target that was hit there. It is support, or should act as support now. So if you're swinging these up, it may continue to get some upside momentum if gold and silver pan out and the dollar and the euro does what I expect it'll do. But again, I'm kind of shifting over more to the gold and silver trades right now and the miners. And ditto for palladium. Palladium. That's where we shorted palladium in the video. Covered it here, reversed actually right there, and then we had a almost equal, still divergent low, and then you had another buy signal. We broke 1917 right there. So objective entry 1 over here, 2 over here. I'm supposed to be circling these. Objective entry 3, and then from there are no more objective entry. Well, this could be, you could look at it that way, but again, I'm cooling off. I'm rolled back into just gold and silver. You have resistance zone right there. It was a target zone, about 2238 to 2064. It was taken out. Back tested successfully, moved up, and we had this trend line here. So bottom line is we've had this little wedge pattern. See, we also had divergence just like platinum, negative divergence that is, and we broke down there. So if you're still long palladium, a break below the bottom of that level, that trading range or support range, about 2039 or so, that's going to be bearish, and it could potentially be the beginning to the next leg down. My convictions aren't as strong right now as they were back here. So as you want, if you're short, just well, I'll tell you, if you're swinging down for a much longer swing short trade, you might want to consider a stop somewhere north of that 2270 level there. TLT reversed right on cue, where I mentioned yesterday as being objective to book profits. Get out of that one. We ran back. There was basically it's at the bottom of this trading range right there, or the 145.97, called 146-ish resistance level. So nothing really new to report there. Same thing with ZB. Hit my 1601 target. Best to get out. Pullback was likely, and there it was. So nice pullback today in ZB. So congrats to you that locked in the gains and sidestepped that, or even reversed it to short it. Where does it go? Well, you get support right there, 158, 287. I just don't have a strong opinion. I'm just standing aside. Sometimes just get in these little hit and run trades, get in, get out, move on to the next one, or just wait for this to set up again. Crude oil still above this 120 minute. There's a 120 minute chart, still above the primary trend line, still diverging. Last update we had negative divergence. That divergence continues to build. It's getting even steeper. See, the slope of these the divergences is decreasing there. So you have negative divergence, and I just added this little minor trend line here today. A break of that next week would likely bring us back to this is just a very near-term target, the 79.46 level, and the primary larger uptrend line. And then a break of that will be a more powerful sell signal. So if you're not already short crude, or you are and you want to add to it, or you're long and you want to know where to get out, that would be it. A break of the, I think we'll come back there next week, and then a break of that level. We can maybe, of course, hit it, probably get a little reaction first, but then if and when it breaks, that should take us back to the next stop is 76.27 or so. And then if and when that goes, this whole thing will be a big false breakout of that key reaction high. It doesn't show well here on this 6-month chart, but that was a major high right there. So as long as gold or oil remains above there, bullish. But if and when it breaks, bearish, and that's what I think it'll do. And it's going to come down here. That's a primary trend line. I have a long-term trend line. So that's what we're looking for on that. And it's partner in crime or closely related. They don't always move together. They come out of the ground together, but sometimes one's doing one thing and the other's doing the other. Is natural gas still looking at a major top on natural gas as well as crude? And so there's your bearish 60-minute bearish rising wedge. It was recently highlighted, the breakdown right there, and we've been stair-stepping lower since. And this was also, resistance, key long-term resistance. Most recently, we put in a little divergent low, and that was a catalyst right here. And we hit the trend line. Now we have a trend line there. I think this I've added since the last chart last time I updated this one. This is 60-minute candles here on this one. But that's it. So positive divergence gave us a little rally up there, just shy of that 6-ish resistance. And so now next sell signal will come on a break of that uptrend line right there. and you can see all the market levels for nat gas. And again, on nat gas and crude, let me just pull the longer term charts. I'm going to show you two. You have UNG, which is the non-leveraged. So if you're going to use an ETF or an ETN for natural gas, or at least in charting one, this is the one you want to use. And you can see back here as I'm scrolling back, I'm going to just turn off all the lines so it doesn't look so busy. And you can see we're pretty much at major, we had major support right there, broken, back tested, failed, back tested, failed, back tested, failed. Third time's a charm, couldn't get through there, rejected. And we've rallied back roughly to that level now. And you can see it even better on this longer term chart. Here's my nat gas weekly chart, natural gas futures. This was a major reaction high back in early 2014. You had quite a few reactions around that level. We ran into it and it stopped it like a rock so far. And this is still the uptrend line. We'll get a much more powerful sell signal if and when this trend line breaks. You also have some support right there around 5. So, and that's what I like about it. If you break both those levels, that's going to be a pretty powerful sell signal. Otherwise, if you're short now and you just want to pull back trade and then you want to get long, well, that's where you want to step in at the trend line and that it's about 490-ish support right there on nat gas. By the way, again, as I pointed out not too long ago, we just hit extreme overbought readings. Last time we were overbought was here, and we weren't even extremely overbought, but we still had a big correction right there. We were extremely overbought there, and we had just natural gas got annihilated. We were just overbought here with divergence, and we still had a big correction there. It really didn't end until we got there. Very overbought here. Natural gas got annihilated. Overbought, 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 annihilation. Okay, and then crude, I already showed you crude on the intraday charts, crude futures, but here's your long term. This is a daily chart, but I'm going all the way back to 2011 and just a beautiful support level back here, because once it was broken, the bottom fell out of crude oil. Crude oil tried again years later. That breakdown occurred back in late 2014. Crude finally, it took years to get there, but in 2018 it hit it to the button, rejected. Hit it to the button here again, rejected. Now it popped it. So on face value, and as of now, that is a breakout. And you want to spin it as bullish? It is. It's bullish unless it fails. And I believe it'll fail. Why do I believe it'll fail? Why wouldn't I take a breakout? You know, I'm a bull on commodities right now, and you know the case can be made there that all things commodities are going up and going to continue to go up. But it's the technicals in this case. First of all, we had a heck of a run in crude already. Everything, you know, gets ahead of itself lately, lumber and a lot of other commodities, and then they correct pretty hard. But mainly it's the technicals, and nothing's changed for weeks now. We had negative divergence that last time we got there, and I pointed it out, and we had a correction, and we traded it. We traded it all the way down, and even traded some counter trend bounces along the way. That was the correction there. And the only thing that's changed is we put in a marginal new high, a very slight high. We're slightly above that level, and because of these big negative divergences, I didn't draw it right there, I suspect that breakout's going to fail. Now, you want to play it safe, wait for the failure, wait for a fallback down below 75 or so, and if you get it, I think it'll be a pretty sizable drop in crude oil. And you know, last time we had negative divergence was right here. That was a double-digit drop there. We had negative divergence there. That was our drop. Negative divergence. You get the point. Negative divergence, correction. They're all marked. Every divergent low and high. And divergent lows are bullish. Divergent highs are bearish. And last but not least, lumber. Okay, so lumber, pointed out many times in the past, these parabolic runs, and most recently I was pointing out this one. We had a parabolic run, 22% drop, set up followed by another parabolic run right there. And as is usually the case with the lumber, when it goes up, once it starts going parabolic, the corrections are very large. There was a huge drop there. And then we came full circle, just as we had negative divergence at that high recently in the big correction. We had a very clear, well-defined, but steep downtrend line, bullish falling wedge, positive divergence. That showed through on the intra-period charts, the 60-minute and 120-minute charts, and there's our rally. So far, about a 60-something% rally, but it is almost over, in my opinion, at least for the time being, or at least a case can be made for that. So if you're still long lumber, it was a highlight, it's been highlighted as a trade idea here. We tried to catch a couple bottoms, we got this one, and we got some bounces in there on that first one there, that first kickback. But we're coming up to pretty significant resistance. It's this reaction high, and that's right around 800 on lumber. So yeah, bullish falling wedge. Sure, can it continue to go higher? Yes, but I think it's a very good time to either tighten your stops or start taking some profits if you're still in that one. Let me give you the futures, and we'll wrap this video up. Not the futures, these are futures, but that's a long-term chart. Let me give you the 60-minute chart or 120-minute chart. Bear with me. I've got so many symbols down here, so many charts going. This one's it. All right, this is a 120-minute chart. You can see it a little bit better than the 60-minute chart. You have the big bullish falling wedge right there. That's the same one I just showed you on the daily chart with positive divergence. There was our breakout, and we've been walking up this uptrend line. So if nothing else, I think you should have a stop below that, both the trend line and at worst case at 652.74 level. It was a target back here. We hit it there. We pulled back. We consolidated. This formed an ascending triangle pattern. That is you have a flat top on the pattern on the triangle with a upward sloping bottom part. There was a breakout and went on and just hit that next target there about 750, and we've been consolidating around it. If we go any higher, my next stop would be 912, but again, it's the risk reward is not favorable in my opinion, because as I just showed you, there's pretty significant resistance just overhead, and we also have some divergences starting to form here. So I think it's time to book profits. At minimum, if we correct, we'll probably come back and make another tag of the trend line, but you probably don't want to ride that out. There's the rally so far from the lows, about 63%, but a pullback now just to check the trend line is going to be about 16 or so percent. Yeah, you may not want to ride that out, but if you want to ride the trend and run it up there, I would certainly, if I was still long, I can tell you I would have a sell limit order set just below that 912. I think the sellers would step in pretty aggressively if we get there. Okay, guys, that's a lot of securities, but again, those are the main asset classes of various commodities and indexes I've been covering, including bonds. So you have stocks, bonds, and commodities, all wrapped into one in 27 minutes. All right, this has been Randy Finney with Right Side of the Chart. Have a great weekend.